Hey everybody, what is up? Welcome back to Funnel Trade. We're going to take our 6-month look at standard Magic Box sales performance off of TCG Player. Now, in years past, we had done this once a year, and more recently, I've started doing this every 6 months just to get more looks at the data as time goes on. Let me explain what I have here, how it works, how I set this up. Then you'll understand, and we'll talk about the results of this most recent look. So going all the way back, what I have is November 2nd, 2022 prices, the first time that I collected them, so 2.5 years ago. Then I have November 9th, 2023, so 1 year after that. And in between, I have this column of 1 year change percentages. Then the same thing, November 5th, 2024, the 1 year difference between 23 and 24. And most recently, May 10th, 2025, and the 6-month change between November of 24 and May of 25. Now, what I'm actually measuring is I'm going out each of these times to TCG Player, and I'm looking at the sales page for each of these sealed booster boxes. And I'm taking the lower of the current market price or the lowest ask price and taking that as the value of the box. Then I'm computing the compound annual growth rate. And of course, if you've been around this channel for any amount of time, you know I love compound annual growth rate because it is an exact apples to apples comparison of the return you get on your money with time factored in. So it's not just a percentage return on number of dollars, but it gives you a return that factors in the amount of time that your money was tied up. So it gives you a time value of money return. The other nice thing about it is you can compare it across assets, across different time periods, across different lengths of time periods, and you're always getting comparable apples to apples answers. And so what we see for a lot of these early Magic boxes going back to 2010 to the mid 2000s decade is they've been on the downslope for a long time. And you can see that when we computed the 1 year difference from 2022 to 2023, a lot of them were down in the 20% range. And then again, the next year, the 1 year loss in price was closer to mid-teens on average. And now we see in the last 6 months, most of them have lost less over the last 6 months. We would put the average of that, in fact, we can just have this calculate it, negative 4.2% on average, just for these, for about 6 years of standard Magic boxes at the beginning of the 2000s. And so this is interesting because Rudy has said a lot about how vintage and old Magic just kind of is unloved right now. And I think this is another good sign of that. That even though we've come off of these crazy highs in all the mania of 2020 and 2021, these assets have been losing price. Now, they're losing price at a slower rate as time goes on. So we should eventually expect them to bottom. But the first interesting thing that we get out of looking at these data is that this seems to be a very long market cycle on these kind of products. And I think that makes sense because the sell-through rate is unbelievably low. When I was collecting the data for this look this morning, most of these boxes had 0 to 3 sales in the last 3 months. So very, very infrequent sales, which means your price discovery is incredibly impaired. If you have some asset that trades very quickly and at very high volume, 24 hours a day, price discovery is really simple. But when you have these ancient boxes that might sell 2 boxes worth in a 6-month period or a 3-month period on TCG Player, it's very hard to figure out what exactly they're worth. And so the market is going to move very, very slow. So I'll scroll down here to the next set. And we had Time Spiral at the top of the first set. And so as we're looking here in the late 2000s and into the early 2010s, we start to see some of these turning green over these last 6 months. So they've gained value in the last 6 months. Some of them pretty dramatically. I mean, you can see things like Time Spiral that after it came down 27% in the first year we were looking at this, it came up 28% in the next year, and then just in the last 6 months, it's come up 37%. That's odd that some boxes are just such incredible performers like that, that there was no consistency, say, in the long-term performance of these. So we start to see a bunch of these turning green, still a lot of red ones, but again, the amount of red is lower. If you look in here, negative 4.7, negative 0.2, negative 9, negative 11, negative 2.8, negative 1.4. And so it's as if with these kind of, we'll call them middle-age boxes, that the market is turning on them. They've hit their bottom, and a lot of them have started to bounce back up in the last 6 months. And then as we go into the late 2010s, what we see is almost all of these boxes are green over the last 6 months. So they've almost all gained price in the last 6 months. Now, there's so many things going on here. One is these boxes just tend to be cheaper because they're not as old. And so your buyers are going to be less price sensitive on a box that, say, is $132 today versus being $113 6 months ago. Most people really aren't going to be worried about that extra $19. And so you can see big percentage changes in the box price when the dollar change is not as large. In fact, you don't see any really high value boxes here. The highest value one on the screen right now is Kaladesh at $346. And that is the bottom. I only go through Throne of Eldraine on this comparison because we entered into such a wild period for the market afterwards. One day I will start adding later boxes to this, but we need to separate some time for it to really be interesting in relation to the rest of this analysis. So like I said, obviously old Magic continues to be unpopular. This is extra weird because we've seen an increase in popularity of people buying some of these old boxes with the early foil cards in them, breaking the box and sending all the foils off to be graded. And even with that, most of these box prices are down over the last couple of years. In fact, I think from the time we started looking at this, yeah, there are barely any. So Plane Shift is actually up over the last 2.5 years, and it looks like just about everything else here is down. Onslaught is up. Plane Shift and Onslaught. And, you know, the arbitrage they're trying to do with grading those early foils is that in the early boxes that included foils in Magic's history, I believe it was Urza's Destiny was the first box with foils. In those early boxes, you may only get 2 or 3 or 4 or 5 foils in the whole box. It was long before WotC started putting 1 or more foil cards in every booster pack. So the foils were very rare. And there have been people over these last several years who simply buy these boxes to break them and get those foil cards graded and look for that huge premium on a highly graded, very rare card. And yet, the box prices continue to go down, which I think really underscores Rudy's theory that all of this old Magic is still so unloved. Now, in the long run, I would be inclined to believe that's going to mean that when it does start to come back up, it's going to come back up furiously because it's been so underwater and so ignored for so long as boxes continue to disappear. Now, why is the 2010s period here so much better for Magic? Why is it recovering so much faster? Again, I think some of it could have to do with price sensitivity and the fact that the boxes are just cheaper. That goes against other theories that people will sometimes tell me that essentially WotC is destroying the reprint equity of everything. If so, I would expect more of the destroyed reprint equity to be in these last 10 years of boxes rather than the 10 years before that, just by virtue of power creep of the game over time. That the more valuable cards will be in the more recent boxes, and if WotC is systematically destroying the reprint equity, we should see it here. we should see it, instead of seeing the price of the boxes just continue to go up. So it's very confusing to me. And I know a lot of it's going to come back to that first point I made, that this is a very long cycle part of the market. I mean, we're seeing literally 2.5 years in order for the market to come down and bottom. And yeah, that has to do a lot with low sell through rate, low inventory of all these old boxes, and not much interest. Most people aren't out buying these boxes very often. Now, one thing that I've added to this analysis that I did not have in times past is I went ahead and I just summed up what is the cost of one of each of these boxes over time. And so we see in November of 2022, when I first did this, it would have been about $55,000. The next year, it would have reduced by about 12.5% to $48,000. In November of 24, it would have reduced by about a further $5,000, 11%, down to about $43,000. But in this last 6 months, it's within $100 of where it was 6 months ago. So the aggregate of the market as a whole is flat over the last 6 months. It's down 0.2%. And yet we see this bifurcation where boxes from the last 10 years are recovering and going up, in some cases just ridiculous amounts. I mean, you'd think this was Pokemon, the way some of these are appreciating. 32, 35, 36, 37%, 40% over a 6-month period. And so you see that bifurcation where some of these are doing incredibly well, but then the older boxes are doing worse and worse and worse, despite there being a small amount of people who are opening these boxes regularly with a profit motive. And so they're encouraged, as long as that arbitrage on the foil cards and the grading remains favorable, they're encouraged to just keep opening these boxes. And you should expect the box prices to climb as they're opening the boxes. So it's interesting data, but it's hard to interpret compared to a lot of things we look at on this channel. You know, a lot of times we're looking at products that have much, much better market volume, much higher sell-through rates. And so the price discovery is a lot more high quality and efficient. And we can tell exactly what the price is supposed to be. If we're looking at something like an Evolving Skies booster box, and it probably sold 4 or 5 of them yesterday on TCG Player, we have a really good idea of what the current value of that box is. But again, going back to a lot of these boxes from the early 2000s, you might see 1, 2, or 3 sales in a 3-month period when you go to look at the data on TCG Player. So it's just hard to tell what's going on with this. I think the most interesting thing to come out of this, really having looked at this over such a long period of time now, over a 2.5-year period, is just how long of a cycle this portion of the market is in. And so you don't expect it to jump up and crash down and jump up and crash down like you would Magic collector boxes. And Magic collector boxes, when they get one printing and then they have very desirable cards in them, when WotC has finally learned how to really put a ton of value and get people to want to buy them, the market cycle on those is very fast. You can see rapid swings in the prices of those in very short periods of time. But this kind of thing just has this ultra long market cycle. And it's going to be interesting to see if we end up going into a Magic bear market in these next 6 months, what's going to happen with these prices if their cycle is completely decoupled from the rest of the Magic market cycle, or if they will come along also, if they'll suddenly become very unpopular, and even on these 2010s era Magic boxes, we'll start to see a whole lot of price depreciation. So I'll take another look every 6 months. It's on the Kanban board forever. And one last thing, I do chart this. So this is the compound annual growth rate compared to the release date, just to see if there's anything interesting in here. And so what we see is that all of these old boxes from the early 2000s through around 2011 all have very similar returns. And then the compound annual growth rate falls off and stays low with just a couple of spikes. And so I'm not sure if it's that, well, there's too many of these boxes still out there and they haven't dried up enough yet. I know Rudy always talks about different changes in the printing philosophy from WotC over the long time period, where early on they just printed an amount, put it into distribution, and that was it. And then later on they went print to demand. I don't recall when those exact changes were in the way he tells the story, but I think this is something that's always interesting to look at to see if there's some kind of pattern over time. And definitely there are two very distinct patterns here. In early era of solid approximately 10% compound annual growth rate, and a second era of much lower growth. So we'll take another look at this in November. Let me know down below if you have any thoughts about this, any interesting observations based on the data. Otherwise, pause the video, pore over the data yourself, and let me know what you think. Thanks to everyone who makes this content possible, especially my very generous supporters on Patreon. Like, comment, share, and subscribe, and join me on Funnel Trade.